Where are the geopolitical clashes coming, and why is that putting a premium into, partly putting a premium back into the oil price? Well, you mentioned geopolitics earlier on. Now, if it's not at the moment between China and the United States, where are the problem areas?
Well, I think it's interesting. What's not registered in the price is, of course, the almost inevitable collapse of Venezuela, which would have a big thing. It's what's happening here in this region. The sense of there's a war in Yemen. There's a Cold War between UAE and Saudi Arabia and Egypt versus Qatar. Lebanon now is a new front. There's a war in Syria. There's all the issues, and there's this basic standoff across the two sides of the Gulf with Iran. So I think all of that is really kind of coming to the price. It was sort of started with the Kurdistan-Baghdad clash, but I think there is that sense of and a greater uncertainty about where's this region going, and a higher degree of tension, and that is registered in the price. And it's been a while since things like that have registered in the oil price.
Do you feel that Iran, Tehran, Saudi, Riyadh are on an inevitable clash that turns it from a cold conflict into a hot one?
Well, I think right now it's a proxy war clash, whether it's Yemen, whether it's Syria and so forth. Obviously, the notion that the missile that exploded over Riyadh was an Iranian missile, there's certainly room for accidents to happen, but there's a lot of different moving pieces now that have a lot of geopolitical significance. And so I think that's what the kind of oil market has been kind of asleep to that, but it's now woken up to that there is some risk there.
And Venezuela, what are the major ramifications from Venezuela collapse, PDVSA missing debt repayments and payments and coupons and what have you, for the global oil markets as well, or the global debt markets as well?
Well, Venezuela is an important producer. It's lost a lot of the talent, it's a lot of its capabilities, what its production really is. And if you had, it seems on the verge of turmoil, if it really moved into turmoil and you lost oil from Venezuela, that would be a shock to the market. So this is like this slow-moving collapse that's happening, and the Venezuela Caracas seems to not be able to reconcile with its population. And if you are a middle-class person and you have the opportunity to leave Venezuela, you're leaving Venezuela, so they're losing a lot of their skills and capabilities in the economy.
But Dan, this is fascinating. We've got 28-year low on production in Venezuela already. The market's had to absorb the fact that the country with the greatest reserves on the planet, apparently, even though a lot of it's pretty heavy, 300 billion barrels or whatever it is, the market's already absorbed a lot of that as well. So losing the extra 2 million barrels a day that it's currently producing, if it were to lose it, the world can't cope with that. Is that what you're saying?
That's right. Well, remember that the whole super cycle in prices in the 2000s started with a disruption in Venezuela. Now, at this point, people will, wish they had built the Keystone XL pipeline, because it really is Canada that can make up for some of that. But if you lost in a significant way Venezuela, that would be a big shock to the system.
Hi, I'm Tanya Breyer, and thank you for watching CNBC Conversation. If you want to watch another episode, just click on the videos. And don't forget to subscribe to CNBC Life for the very best in feature programming. Thank you so much for watching.